Afternoon, how are we all doing? Afternoon, Kennelly, Crumb, Baggy, Brian. Afternoon, Peter, Fletch, Amy, Derp, Neo, Tom, Marco, how are we all doing? Afternoon, Sarah. Right. Boring. Dax today, absolutely nowhere today, just went sideways. I'm absolutely exhausted, by the way, just so you know. I've been on the phone to the Inland Revenue this morning. So after an hour on hold, listening to the same tune over and over again, finally they answer the phone and it's on speaker and I can't get my screen to work. So I did get through to someone, but got through to the wrong department initially. So after about another 20 minutes of getting through to the right department, I got my question answered. Great. So yeah, 1 hour and 20 minutes to ask a question to get an answer. And they fleeced me for some money at the same time. So I'm exhausted. I've been sitting there waiting on hold for over an hour. Just drains you, kills you. Afternoon, whoever I haven't said hello to, Tom, Marco, I've already said hello to Jimmy. That tune has not changed in 20 years. I know. And it's awful. It's going around in my head. It's not going to be out all day now. That's what it does, literally. That same riff over and over again. No wonder people get angry on the phone after being put through that torture. It's like you put someone in a cell, put a bag over their head, tell them to stand in the corner. That's the music you would play to them if you really wanted to break them. Awful. Anyway, afternoon, EMAC. DAX today. Oh, what a move. What a move. Look. So the ORB today, I took short. We watched it on stream. We got down to the propulsion gap. I said, I don't like the look of this. I got out. Thankfully, I did. And then it pushed up and I said, watch for a bounce. And then it pushed down and I said, watch for a bounce at that other level. It played out exactly as I said today. I wasn't expecting it to, but I said, you know, watch for a bounce there. It bounced up and literally look at it. My God, we haven't gone anywhere. So I'm absolutely over the moon with that $500 because that was hard today. But anybody playing range-bound support resistance bounces today probably absolutely cleared up because it literally went up without one down candle, down without one up candle, few down candles, but up to resistance and poof, all it did. So yeah, made some money on that, which is good. So we'll watch these three this afternoon. News-wise, today we've had the construction PMIs for the UK, didn't really do anything. Unemployment claims came out as expected for the US dollar. So if we look at the Euro US, we literally just had a whipsaw off the back of that. So Euro US dollar, not done anything. Nothing's done anything, basically, as you can see. So by the ADRs, we've got New Zealand dollar CAD. That's the only thing that's moved today of any distance, and it literally hit ADR, bounced straight off of ADR and gave you a lovely short if you bothered to take it this morning. But that was it. There's nothing else moved today. So there's your reversal alert. There we got probably not enough to get a target out of that. What was it? 23? 32 is half an ADR. So you got over a quarter of an ADR, but not half an ADR. So yeah, nothing's moved. Crappy morning of sidewaysness. US dollar yen, no movement. So we opened this morning in Asia there. Had a lovely rundown in Asia, and I was like, yes, this looks great. Then we did a V-shaped recovery, and we've sat there all day. So, yeah, bit like pulling teeth today. So no real movement at all. RSI dashboards flat on the hourly. We've got a couple of 4 hours to look at, so we'll have a quick look at those. Main news of the day is oil. Oil's down again. We've just had the Saudis saying, yeah, they may extend the 1 million barrel oil cut into 2024. So restricted supply. meaning higher prices. So yeah, there's a good chance we might get a rally off of that at some point soon. But other than that, we've had some Bank of England, we've had Broadbent speaking, nothing much said there. Casimir this morning, we should not at the moment use other tools such as balance sheet until it is certain we do not need to hike rates any further. So sort of hinting to the fact that they're probably not at the end of the interest rate hikes yet, which is bullish euro. Waiting for Lagarde to say something of interest, really. So yeah, nothing else news-wise, basically. Jobless claims as expected. Australian Union representative Chevron strikes in Australia. That's had any impact on the Aussie? A little bit of a whip on the Aussie. Yeah, so there we go. So looking at the Dow, got a big rally going in pre-market. We've got 2 minutes till the open. So upsides on the Dow today. We've got yesterday's high. We've got nowhere on the US indices either. Look at this. I mean, ADR runs today. There's loads of room today. So if we get a clean break today, we might get a very nice trend today, but we'll see. So that propulsion gap from Wednesday at the moment is holding. They're holding that level. So upside, we'll be looking at yesterday's high, failing that, the top of that propulsion gap, and then ADR. Downsides, we've got the previous day's low, which has actually been used twice as support, and then previous day. So these two lines to the downside, potential for bounce points south. The S&P, pretty much the same thing. We're very close to yesterday's high, but we'd be looking at ADR to the downside. Upside could be anywhere in this propulsion gap. We could find some sellers. Other than that, it's ADR. So there's loads of room on everything, basically. And NASDAQ, very easy. Previous day's high, which is last week's high, the high of Monday and the high of Wednesday. So that whole area there is going to be resistive. And then downside, miles, 125 ADR. So because we've had such a contracted morning, if we do get a big run, there's loads of room in either direction today. So we'll see where we go. 24 seconds to go. So we'll watch the open. Is there any way to just avoid paying taxes and trading profits in the UK? No. Well, there is. But if you get caught, you go to prison. So I'd probably advise to pay. That was the whole thing. Basically, I set up a payment plan on my payment that I had to make. And they basically set the payment plan up for the year, so I pay monthly. And they charge interest on it because I'm not doing what's called a payment on account, paying in advance, because they want you to pay your tax in advance, even though you don't know what you're going to earn, which is why I get an awful rebate here. Overcharge is just a pain in the ass because you never know what you're going to earn every year. But basically, I got a letter saying I was being charged interest because I hadn't paid. And I was like, I have paid because you set up a payment plan. So I phoned them up and they said, yeah, no, wait until you've paid it and then phone us back. So I had 2 phone calls with 2 different people, both telling me when it's finished, we'll sort it out because it looks like it's been calculated wrong. So I phoned up today and it isn't wrong. I have got to pay that interest and it was about £13, which is nothing, obviously. But it was basically, they didn't tell me what it was for. They told me it's because I hadn't paid my tax. What it actually was you have paid your tax, but what it is we charge you interest on it. So they calculated all my payments on the interest rate in December last year. And obviously we got a very different interest rate now, as we know, because it's been going up for 18 months because we watch it every day. So it's basically the difference in interest to what I started at to what the Bank of England charges now. But nobody told me that. So it wasn't until the last lady today actually explained it. I was like, oh, that makes sense. Why didn't you just send me a letter saying that? Rather than, you haven't paid your bill. Government. No breaks yet. Oh, yeah, no long on the Dow. So long, attempting the long on the Dow. Thinking about it, yeah, long S&P. NASDAQ, no break yet. So yeah, that was good fun this morning. But yes, unfortunately, you do have to pay tax. The The problem with tax, not the problem with tax, the problem with brokers, well, it's not really a problem. When you set up a brokerage account, you have to provide your tax details and they report your tax. They report your brokerage activity to the taxman. So even if you said you tried to get away with it, they know what you earn because your broker reports it to them. Can't get around that. It's part of the regulation. Which it should be, because we do need to pay taxes, because if we don't pay taxes, we don't get any services like police, fire, bins collected, potholes being filled. No, they don't do that one. And all the other stuff that we pay for. NHS in the UK. Don't get me started on the doctor strikes. Day Trader FX afternoon. I caught a second bounce from the bottom. EMAC, good job. Yeah, lovely support resistance bounces today. Very, very good. Afternoon, Iraqi Peter. Kadabra, JC. Afternoon, David. I got nice sales on the Aussie New Zealand. I'll have a look at that in a sec. Just going to watch this open. You need a good accountant. I've got a good accountant, Jimmy. There's nothing wrong with my accountant. He does everything absolutely fine. It's the tax man that seems to get things wrong. Would you believe it? They've got two systems for setting up payment plans. One is the one they do over the phone. The other one is the one you do online. Would you believe the two systems that set up payment plans, either on the phone or on the computer, don't talk to each other? So I phone up and say, I want a payment plan, please. And they go, yep, no problem. You can either do it over the phone or you can do it online, sir. And I say, don't worry, to make it easy, I'll do it online. And they go, no problem. They don't mark it on the system that you're setting up a payment plan. So you go and do it online and their system says you haven't paid because that one doesn't talk to that one. This is the department in charge of getting tax in, which helps our country survive. They have two systems that do not talk to each other that do the same thing. This is why it's difficult to vote in the UK, because it doesn't matter who you vote for. They're all clowns. You watch. Taxman, hello? Can I speak to Mr. Sampson, please? Anyway, can you just present the capital gains? Talk to your accountant. There's all sorts of ways you can... it's not capital gains. It depends if it's your main income or not. If trading is your main income, and the way they define that is what is the majority. So if you've got a job in McDonald's, you work as a taxi driver and you trade, if your trading income is more than those two, you are a trader. Yeah. So it's profits basically that you make. You pay tax on profits. Basically, you are self-employed. You can set yourself up as a limited company, but then you have issues with professional licensing and brokers. There's all sorts of ways and means to do it all, but you can do dividends as you set yourself up as a limited company, but then you have to declare what you do. And if you declare yourself in finance, you have to get registered with regulators. It's a real mess. The best thing to do is just be self-employed and do a self-assessment tax return. In the UK, that is. I don't know about other countries. I've no idea. NHS is on its arse. It is on its arse. Crime rate's up. Yeah, we need more police. We can't do that because the taxman doesn't know how to take money from a payment plan. I'd happily pay more tax if the UK had better services. What do you mean you'd pay more tax? You don't get a choice. You have to pay what you pay. You saying you don't declare it? Outro FX. Writing this down. No, not capital gains trading points yet. Trading will never be capital of nature. For real. Good content and channel. Thank you, Sam. If you lie on your tax return, how do they know? They've got all sorts of systems. I don't know. I don't work in the tax office. I have no idea, but they know. If you basically, when you sign up with your broker, you have to give them in the UK, you have to give them your national insurance number, your driving license, your passport. It's all for money laundering. Yeah. Your broker is, if it's a UK regulated broker, they are legally obliged to provide your broker statements, which shows obviously your P&L. So you've got 50, 100 grand's worth of profit sitting on your P&L with your broker or brokers, it's a paper trail, isn't it? The only way you don't pay tax is if you don't have a paper trail. I don't know anything in this world that doesn't have a paper trail. So you just pay tax. The only thing you can do is not anything catch businesses, I suppose, or if you accept cryptocurrency, I guess, maybe. But we need to pay our taxes. It's the only way we keep our economy going. Not that you'd think it by the look of the current state of the UK finances. But anyway, just moved to the UAE. Yep, there is that option. However, I have a wife and 2 children at school, so she might get a bit angry if I say, sorry, love, off to the UAE because I don't want to pay tax. And before you say I'm moving them all over there, I can't afford it. No, I'm saying I'll be happy to pay 30 to 40%. I do. That's the annoying thing about it. It jumps from 20% to 40%. It's like, if you're successful, you pay twice as much, which means you become poorer. To pay twice as much tax, when you jump up to the 40% tax bracket, basically what it means is you have to do 3 times as much earnings to get the same take-home money. Yeah. So it's not actually financially viable to earn more than 70 grand a year, because as soon as you start owning over that, you suddenly start getting taxed to the rate that you really need to do 200 to actually take home the same as if you made another 70. It doesn't add up. It just doesn't work. It's not financially viable to be a high earner. Unless you are a super high earner, you've got to go way over that bracket. So you work out your taxes so that as an income, as a household, we make sure that we earn an amount of money. The rest of it goes into a company. And the company has to pay corporation tax on that. And then we can draw that as dividends whenever we want to at a later stage, which I have to pay 40% tax on. We are the most taxed country on the planet. Anyway, that's tax. This is trading. Hedged on the NASDAQ. So market's rejecting the highs at the moment, or looking like it is. See where we go. The government sorted out our country. Get a broker outside of Britain. Pay with crypto. Done. Yeah, you could do. I personally don't have a problem paying tax. People that don't pay tax, well, I don't know anybody that doesn't pay tax, but people that don't pay tax shouldn't have the police turn up if they get stabbed, or an ambulance if you get into a car crash. Die on the side of the road. Why should you have an ambulance come along? You haven't paid for it. Your house catches fire. Hopefully someone will lend you a bucket of water, but fire engine shouldn't turn up because you haven't paid for it. Why should you have your bins collected? We don't want to talk about South Africa. They're very from the third parties. Okay, I don't know what that means. And Geo-English was absolutely perish in the heat. Yeah, we wouldn't be able to survive the UAE definitely wouldn't be able to survive the heat. Although I would like to be chased by a Lamborghini police car. That would be good. Guys, the most tax efficient solution is to move to a low tax country. Yeah. Yeah, it's easy to say. If I was 25, not a problem. When you're in your late 40s with a wife, kids, mortgage, upping and moving to a different country away from your family and all your kids' friends and education, not an option. Setting up a company in another country, that can be done. But then again, speak to tax people. Anyway, don't worry about all of this until you're earning more than 20 to 30k a year in tradable income. Because other than if you don't earn more than your job in income from trading, you don't even have to worry about it. Dividends used to be 0. Hire Greg Secker as an accountant. I think I'd like to hire Greg Secker as accountant. Come and pay tax with every breath you take, rather than buy food and cigarettes, go to the movies. You pay tax all the time. Yeah, you pay tax everywhere. Am I in my 40s? I am. I thought I was older. Cheers. Thanks, mate. I'm in my 40s for another couple of months. Then I'm not in my 40s anymore. Oh, Tom, that's nice. Thought I was in my early 30s. What gave it away? The bags of staring at trading screens for 15 years? Oh my God, I just stretched my eyeballs. Looks like I'm about to get hedged on everything today. Same as yesterday. Managed to get a break even yesterday, though, so we'll see. Maybe 20s. Oh, yeah, right. What are you after? Not in my 20s. Right, so hedged on the S&P. Looks like the Dow's going to go as well. So we'll have a look at those in a bit. So breaks to the downside. So NASDAQ shorts pre-market low basically today is your first support, followed by that support. And then we're going back to yesterday's low, which is much further away, but within ADR. So that's ADR today. And that propulsion gap down there. And that is the previous day's low, and that is yesterday's low. So NASDAQ downside, there's a couple of spots, really. That area there, potentially, which, you know, wasn't a great support, but might get some action there, if not coming down into propulsion. Assuming we do break short, it's not going anywhere. If we have the same sort of day as we had on the DAX today, we're just going to go into rotation, aren't we? Don't forget tomorrow, we've got unemployment rates coming out. So it might be that we just get a rotation today while we're waiting for tomorrow. I'm not missing earnings, am I? No, that's right. It's earnings fortnight coming up, which is starting this quarter on the 16th of October. So that's earnings fortnight, which is where all the big stocks announce their quarterly earnings. So we get a lot of volatility coming through the indices. So we'll watch this. But next week, it kind of starts end of next week. And then we go into that week, it sort of starts to get going a little bit. Netflix, Tesla, a few biggies in there, Goldman. And then the 23rd is the big one. So we'll have to make sure we keep an eye on that next week. Haven't got hedged on the Dow, but this is a little painful today. Not really getting any movement in any direction. We'll come back to that in a minute. Right, FX stuff. Somebody wanted to look at something. I can't remember what it was. It was absolutely ages ago. Aussie New Zealand sells, David. Yeah. So just filling that propulsion gap from the news, from the interest rate change on the New Zealand dollar yesterday. Quite surprised the Aussie's weaker than the New Zealand. We've just had that news, haven't we? On the Chevron going on strike. Doesn't seem to be moving down a lot. So this looks like it's New Zealand dollar strength coming through at the minute. Or it was. Don't know what's causing that. Sell off with the Aussie New Zealand. So good short if you've got it. Nice short in a downtrend at the moment. Very big downtrend though. So I'll be watching that for a pullback. This might well be that kind of move. So be careful. But if you've shorted it from there, you might be ready to get out of that shortly. Dow, hedged on the Dow. I'm hedged across all three today. Crappy break. Right, come back to those in a minute. Right, so ADRs, we haven't got any to look at today. There's just New Zealand dollar CAD. And the New Zealand dollar CAD basically has already played out. You've had your reversal off of that. Blimey, that's shot up back up again, look. So you had your reversal at ADR. There's your M pattern. Shot down. And then we're back up again. So a lot of volatility coming in on this. Is oil moving? Really? So that's your only ADR. There's no RSIs to look at on the hourlies. We have got some 4 hours though, which we'll go through. So CAD Swiss, I got out of the CAD Swiss yesterday. So all flat on that now. So that was a bit of a squeeze, that one. Got 5 on that, but all out yesterday on the profit take move. Still coming down at the moment, have flips long. Basically, we had an H1 extension yesterday. So on H1 yesterday, we were extended. So got an entry there after that push down. So looking for push back up. So if we are going to continue to the downside, looking for a pullback on that move, basically before they start the next leg. Obviously, if it continues down further, we'll be looking at it pulling back further into that last leg, continuing down and then pushing up from there. So in one there, waiting for it to come down a little bit further, maybe for another exit, but another entry rather. But I'll be looking to get out in that propulsion gap at the moment, which is at that accumulation. So we came down, sat there and accumulated for about 2 days. And we pushed down for another leg. So I'm looking for a retest of that area of balance, see if this is price discovery failure, in which case it will go that way. If it is a success, it will bounce down. So got one long on that. That is now an H4 RSI extension as well. So if you're trading H4 M5 or H4 M15, you'll be getting into that today. CAD yen, nice extension to the downside, not taking anything long. The EA is turned off on all yen pairs. So I'm not trading any yen pairs at the moment, apart from the US dollar yen, which I'm short. So obviously this big move down and the intervention is going to trigger a lot of alerts to go back the other way to mean revert it. But I'm not mean reverting anything yen until I know what's going on with it. And at the moment, it's completely stuck. We do get stuck after an intervention move because the market shock, basically, it just doesn't move for a bit and then it picks a direction. I thought that direction was starting this morning again, but it didn't, did it? It pulled back. So we'll see where we go. But we are holding at the moment the propulsion gap that started the intervention move, and we are making new lower highs and lower lows, but it's a very, very weak channel we've got going on. What I was expecting was a big push, pullback, and then a continuation, and then maybe a bit of flip-flopping around before we start market structure down. We don't seem to be doing that. We seem to just be going sideways. So it is still bearish, though. There's no bulls interested whatsoever because they know they can't go above the 150 level without getting shot. So we'll see. Don't know what's happening with that, but all of these yen RSIs you're going to get, there aren't any today, but we've had some, and obviously we had all the ADR extensions light up. Not really interested in longing these at the minute. They may well work, but if they don't work and the intervention move is going to be the start of a couple of weeks worth of rally, which is typically what tends to happen, you don't want to be trying to build a long position because it could just come down like a house of cards and you just will get into massive drawdown on it. It's not worth taking the chance on. So that one's extended. Euro CAD is extended on the 4 hour. Short on that with one position at the moment. Looking for a continuation bounce. However, Aussie dollar's not doing particularly well at the moment because obviously they didn't increase their interest rates. Euro, we think we've got another one coming, although they froze it last time. So this is a tricky one to call at the moment. Got the pullback on that leg there. So it's now extended to the upside. So either looking for a continuation short or looking for that to be a new peak formation low, pullback, and rally from there. So either way, shorting it down into this area here and then don't care which way it goes from there. So that was an H1 extension yesterday. The reversal alert was in there somewhere. But it's extended on the 4 hour. So looking for a pullback from there. So that's Euro CAD. That's the biggest extension along with the US dollar CAD. Pound CAD. Yeah, there's a lot of CAD here, obviously, because of the Canadian dollar weakness. So the CAD has been completely collapsing off the back of oil prices. So therefore, everything's taken advantage. But that oil price is not going to weaken for long. Yeah, Saudis have come out and confirmed there's no increase coming in their production, which means supply will be restricted. Supply restriction equals higher prices. Just waiting for it to tick back up again. So when it ticks back up, potentially the Canadian dollar will build a little bit more strength as well. So it's not the only thing the Canadian dollar moves on, but it is a big part of it. So we'll see where we go. But there's potentially a good short opportunity on the pound CAD as well. That's pretty much the same as the euro CAD, but I'd take the euro CAD because it's more extended, basically. So pound CAD is extended. I didn't get that entry on the hourly. The EA triggered just outside of that extension. So it didn't get the signal at the right time. And these moves here where you get a little peak above like that, I like to be, above extended. Yeah, really push up hard. In that case, you tend to get a good strong close in a good strong push, and the reversal happens a lot higher. These little ones here, I don't mind missing them because a lot of the time they don't work. Look. So didn't get the short on it, but it is extended on the 4-hour. New Zealand dollar CAD, all the same stuff. It's New Zealand dollar moving on the previous run-up we had before the interest rates, and the Canadian dollar weakening off the back of oil. So good move there. Lovely extension. We just got extended again. You had an opportunity to get in there and out. That was over a 50% retracement on that move. And hourly didn't quite get the extension again. So I didn't get into short, but that would have been a nice short if you took it. You had plenty of room for profit on that one. Straight into propulsion, straight back out again. And US dollar CAD. So in this one, 2 shorts at the moment. First one was taken. This was an hourly RSI extension as well as a 4-hourly. It was here on that push up that we had from Friday into Monday. It hasn't stopped since. So the US dollar's had a little bit of a rally, not very strong, but a little bit. And the Canadian dollar's obviously weakened off of oil. We've had negative news, which has helped this move as well. So, but it is all starting to turn around now. We've had another reverse alert on it this morning after that push up. I got into second position on this one yesterday on that move, which just went sideways, and they literally just peaked above the highs, back down again. So good looking extension there on the 4-hour for a short. Don't know which way this one's going to go long term. I'm just targeting a small pullback at the moment. We're watching this monthly high potentially for an accumulation to build around there. So the danger is you get a push and a flag break, or a push and accumulation at that high. So I'll be keeping an eye on it. That is basically going to give me profit, that high. So there's my break even, that line, the red one. Blue one is the monthly high, which is what we broke out of and then used it as support and bounced away from. So if we come back down, we might find, probably will find, more limit orders there, because the last time they tried to break that level, the buyers just blew them away. So there's going to be limits triggering there, but there will also be an awful lot of profit on the table there that they'll want to take. So there will be a lot of selling pressure. So I'm looking for a pushback into propulsion. If you look at the hourly chart, I'm looking for a pushback into the first propulsion gap I get to, which is that one there. Obviously, it could come anywhere down in that move or anywhere in that move. So that's a nice profit. It's about 0.71% profit, and easily achievable, assuming we do get a pullback, obviously. So the reason this won't pull back is tomorrow. The Canadian unemployment rate and the US dollar unemployment rate. Obviously, when you're looking at something like the US dollar CAD, tomorrow is D-Day. Yeah. So at exactly the same time at 1:30, we've got the unemployment change and unemployment rate for the CAD. We've got the non-farm payroll and the unemployment rate for the US dollar, all coming out at the same time. So if the Canadian is a plus and the US dollar is a plus, they cancel each other out. And vice versa, if they're both negatives, they cancel each other out. One's a positive and one's a negative, you're going to get a big, strong push in one direction or the other, depending on which way, obviously, the news goes. So tomorrow we could have a big move on our hands. So we'll see what happens. IV PMI is coming out in 3 minutes for the Canadian dollar. So we'll watch that. Well, this is a bundle of fun today, isn't it? Going anywhere. So we watched the US dollar CAD while we're on there because that is going to be affected by the news in 2 minutes. Honestly, I thought you were 43. That's a bit accurate, AZ. If I wasn't a trader, where would you be? I don't know. In a parallel universe. And I'd be an Avenger. Pretty much. Pretty sure I'd be an Avenger. The Hulk, probably. I don't know. I'm an ex-programmer, so... Well, I am still a programmer. Speaking of programming, Stock Index Hedge EA is out for MT4 only. Just so you know. I haven't put any information out about it yet. It's a soft launch. But it is out. Am I still in the pound Aussie? I am. How long we got? 1 minute, 2 minutes. So pound Aussie, I am short at the moment. So we basically pulled back 50% of that move into the propulsion gap. So yeah, if that holds, I'll add. If it doesn't, I'll out. Wait and see what happens. Not going anywhere. So we're day 3 basically sideways, aren't we? After that move. So we had the move up. London session opened, pushed up and down and up and down and up. And so we're just hovering at this previous resistance at the minute, not sure where to go. So we're either going to go, break that high, in which case I'll scale in and short the next drop, or we're going to drop and I'll get out of the next propulsion. Right, 50 seconds to the news. I'm not sure if Financial Juice release these as red. They probably won't. November Arab crude. Swiss yen, I'll have a look at that in a minute. Well, Swiss yen's come down and pushed back up again. I'll have a look at that in a second. Waiting for the MT5 version, Amy. You might be waiting a while. The well, I don't know. The MT5 version, the MQL5 marketplace, in its wisdom, released MT5. So the news is out. Wow. So that's a positive. Oh, wow. So positive figure, and the Canadian dollar seems to be dropping on it. It's not really moving. I don't think we're going to get much off of that. Indexes have moved more off of that than anything else. Look. Oh, look at that. NASDAQ. See, this is the difference between a highly profitable day and a pain in the arse. Yeah. That entry there. Look at that wick. Yeah. If that wick had have been there instead of there, this would have been a TP hit and a $2,000 day. Because of that tiny little wick, I'm hedged in with a $1,200 profit, loss at the moment. Hedge. It's only a hedge. It's not a loss until it's a loss. It's a hedge at the minute. But that's the difference in trading between being profitable and not being profitable. That. So that was my trigger. If I'd have put my offset at 50 instead of 30, I wouldn't be in this short, and I'd be sitting there going, well, that was easy today, wasn't it? Right, NASDAQ's coming down hard. We've gone straight through that propulsion gap, straight through that potential support. So we'll be looking on the NASDAQ for that low, that high. Not really anything there, is there? So this area here, above this propulsion gap, which is where my target is today, just before ADR, that's where I'll be looking for some kind of bounce on the NAS, assuming we've got enough sellers to continue this move. S&P, just adjust targets on the S&P as well. That's tricky. S&P is a difficult one today. So anywhere around those areas today, I would say you're going to get some orders triggering, assuming it gets out of these lows, that is. So I'm going to go for the top of the propulsion gap, which isn't far away from ADR. So they'd need to get through all those buyers, basically, to get to ADR. So I suspect we'll find some, at least a bounce out of it. Dow. It's a nightmare, isn't it? So Dow, I'm going to look at yesterday's low, I think, on the Dow. We've already triggered a bounce twice out of the propulsion gap. So we know there's buyers there. We've got to get there first. So we'll give the market an hour or so to decide what the hell it's going to do. But there's not much movement on the, that's more like what I was expecting to see. So the Canadian dollar news was positive. So you would expect that to have a positive impact. It obviously had a quick negative run, but it's pushing now. So the Canadian dollar should be rallying up a little bit. So a bit of bullish movement on the CAD, which is good. So Swiss yen you wanted to look at. I was going to say something and I can't remember what it was. Oh yeah, MT5. I'll cover that in a minute. So Swiss yen, yeah, I mean, basically the intervention move was completely undone. Not as strong as the Japanese were hoping, obviously. So they bought that all back up again very, 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 very fast. And we're just sitting there sideways. So again, anything you do with any of these yens, just remember who you're dealing with. Yeah. Could go either way, obviously, but the intervention has come, although they haven't done it because they said they didn't do it. So you must obviously listen to them. They know what they're talking about. But we'll wait and see what happens. I think we've got another move coming on the yen. Colonel Pinecone, long, gold, 1896. Go for it. Right. Just watch the Euro CAD. I just want to see. Yeah. So good move on the Canadian dollar. So Euro CAD's coming down nicely. US dollar yen's just had a nice bear move as well. Good. All going right way. Yeah, so the MT5 version of this. So there's a problem with the MT5 marketplace. And it's not really the marketplace's fault. It's MT5's fault. So with MT5 products, you have to specify whether it's a normal account or a hedging account. Because in the US, you can't hedge. You do FIFO. So when you put a product on the marketplace that is deemed to run on a hedge account, it has to test your product on multiple instruments on multiple timeframes. On MT4, the testing mechanism doesn't do this. So with a product like the Stock Index Hedge EA, it works on times. Yeah, and these times are in 5-minute intervals because you only trade it on the 5 minutes. It doesn't run on any time frame you put it on, but it's for 5-minute charts. There's no point in running it on higher time frames. It's an opening range break EA that hedges on 5 minutes. But you have to, when you upload a product into the marketplace for MT5, have it tested on gold on the hourly chart for some unknown reason. This will not run on gold on the hourly chart because it's using 5-minute increments. So the only way I can get this onto the marketplace to get for people to be able to get it, is to change all of these to 1 hour times. And that should then get through the marketplace validation process, because it has to validate that the code's right. There's lots of safeguards you have to have in there, like there's enough margin in the account. There's all sort of rules they put in place to make sure you don't pump a load of crap out there, because obviously it will just kill everybody's accounts if it's not checking certain things in the markets. So this is the problem I've got. It's a 5-minute time frame that you can only upload to be tested on the hourly time frame, and of course it doesn't trigger any orders. So it just comes back and says, no trades taken. And I go, no, of course not, because you're testing on the hourly, you stupid idiot. What are you, a computer? Oh, yeah. So I need to find a way to get this running on the hourly time frame. There is a little workaround I can do where I can say, if you are running in the strategy tester, change to 1 hour increments. However, everybody will download the demo, run it in the strategy tester, out the box, and go, it doesn't take any trades. And I will just get moaned at because it doesn't work. And there's nothing wrong with it, but you haven't read the manual. Because if you'd read the manual, you'd know that it doesn't run on the hourly time frame. So I've got a bit of a problem with the MT5 version. I had the same problem with the opening range breakout EA. And that is why in the opening range breakout EA, there's a whacking great statement at the top of the manual that says, do not use default settings, because the default settings are hourly for a 5-minute time frame. So I'm trying to figure out the best way to get around it. Not get around it, but get it working. So yeah, I need to spend some time on it. So I don't know when the MT5 version's coming out. Also, I haven't tested it at all on MT5 yet. I've got the code converted and I've got it up and running, but I haven't tested it. So I've got to test everything, which takes a week or so. But the MT4 version works. So if you just literally can't wait, get the MT4 one. But if you want to wait, it will be out at some point, but I can't give you a time frame because it's a pain in the backside. Do you think there's a real chance UJ climbs back up above 150? There's always a chance. I don't think so. I don't know, obviously, but I don't think so. The trouble is, if it does, the Japanese will intervene again. So the last time we had the intervention, we got to 152, which is all the way up here, yeah? So that is the potential for the next intervention level. So this was the intervention, the 150 intervention. This is where they said they would intervene. They called a number at 150. This time round, they said they're not calling in a number. It's not a level, it's a volatility spike. That's what we got, a volatility spike. That's why they kicked us. But that's the first intervention we had at 145, which failed. So if you go back and look historically, can it fail an intervention? Yeah, definitely. That was a massive failure. Within 3 days, we were back to where we started. Then we went sideways for 2 weeks while the market was like, do you think we can do that anymore? And they went, let's have a go. Oh, let's poke it again. Then the Japanese went, stop it. Stop it. Seriously, guys, stop it. Fine, I'll stop you. The question you have to ask and answer is, are we at that point or that point? This is the first intervention we've just had. However, the first intervention has happened at the price point of the second intervention, which was the successful one last year. I don't know the answer to the question. All I can do is point out what's happened historically. First intervention failed and they pushed. Second intervention pulled back 50%, where we are now, sat sideways for a bit, retested, and then sat sideways and collapsed. And that's what I said. You're going to sit sideways for a bit after this because the market's just been shocked, big style. A lot of banks and institutions and pension funds are now sitting there going, that wasn't part of the plan. Why are we in so much drawdown? How are you going to get out of this? I don't know, sir. It keeps coming down. Figure it out. They will figure it out, but unlikely they'll be able to figure it out by doing that, so they'll have to hedge themselves against something else. That's not our problem, that's their problem. So yeah, I don't know. And then third intervention was basically the nail in the coffin. So we'll see. We'll see what happens. But right now, it certainly looks like we've got the bang, shock, drop. Can you create a scalping EA that is only designed to profit a few quid, hundreds of times a day? No, that's called an HFT, and it won't work. You won't be able to do that on a live account. If think about it, can I create an EA that scalps a few quid hundreds of times a day? Of course I can. But how? You've got a spread. Yeah. And you've got a broker execution, and you've got limits on how quickly orders can get executed. The HFTs work in banks. The reason people put out EAs there called HFTs is because banks use HFTs. If you look at any quant in any bank, they use HFT strategies. The CME runs off HFTs. The Globex session at the CME runs on HFTs. Yeah, you can't do it in a retail broker. You won't get the order execution fast enough to make money doing it. And all these people that are pumping out these HFTs to pass prop firms get lucky runs. There's no long-term edge in it. Your broker won't execute it. And they're all running on demo accounts. Why do you think all the prop firms in their terms and conditions have forbidden strategies, high frequency trading? Yeah, because it's a demo account. We can't replicate this on live. Won't get it working. Ask me. Well, I mean, you could try, but that's my opinion on HFTs. You can't. It's a bank. It's a bank. The banks are the market maker desks at banks are ahead of you in the queue. Yeah. So an HFT is designed to go in, out, in, out, in, out, in, stop, in, stop. Out is that much bigger than stop. Brokers slip you. Yeah. So the profit margins you're working with HFTs, the spread, the commission, and the slippage mean that you can backtest them as much as you like, and they'll look absolutely beautiful. Stick it on a live account, the P&L goes totally the opposite direction. I've tested them; they don't work. Would be nice. They just don't. You can HFT trade in futures, but then you've got a $4.50 round commission, and the funds that run the HFTs on the other side of the HFT systems that you're running don't pay a commission and get preferential order execution. They're always one step ahead. This doesn't work. You can't do it unless you work in a bank. I don't. Managed to buy the SIHEA a few minutes before the open and set for the Dow. Works fine. Oh, have you, Peter? I didn't even know. Well done. Peter's the first customer. The cheapest AI. Yeah. So it's worked. Good. So I'm looking for feedback, obviously. Anybody that does go for this stock index hedge EA. I've tested it thoroughly in here every day for weeks and weeks and weeks, but I need to see what other people's experiences are. I get the feeling, obviously I've not tested on loads of different brokers. There's all sorts of things that go on with different brokers and stuff that I don't know about. So I need feedback on it. And it's version 1, so it will be tweaked and developed. I could just install MT4 and use the EA, but all my other indicators like support, resistance, propulsion, ADR, and everything run for MT5. So I had to run MT4 and MT5 at the same. Yeah. There's all sorts of ways around it. But obviously EAs are designed to trade. So you really need to have those on the account you're going to execute on. Indicators you can run on another platform. You could run, if you trade on MT5, you can open up an MT4 demo and have all the indicators running and look at that for analysis. But actually just take your trades. You just need a white chart to take your trades on, don't you? You're buying and selling. It doesn't matter. But with an EA, obviously, that is executed on your broker account. So you need that running on whatever you're trading with. If you're on a broker that doesn't allow MT4, I'd ask the question, why? Because there's not many out there. There are prop firms out there, I know, but So bear with me one sec. The current intervention looks much more like the second one. Yeah, going sideways after the initial push down. First intervention recovered. Yeah, this does. I mean, the thing is, as I said, the measurement that the Japanese are using is the US dollar yen because of the import export mechanism that the Japanese use. All of their exports are to the West, charged in US dollars. That's the currency used to buy and sell, not the yen, which is why this intervention is happening, because it's killing the industry, it's killing the companies. They can't physically make money when their currency that they earn in, not what they charge in, but what they earn in, is doing that. Yeah. Imagine every time somebody paid you, you got paid in one currency, and every time you spent that currency, you got 50% less than you paid, 150, which is the exchange rate. You can't do it, can you? So you buy all your stuff in from Japan in yen, and then you charge it all out in US dollars at half the price you bought it for. It just doesn't work. So they have to solve the problem. The US dollar can't help itself going up, because if people want to buy the US dollar, they'll buy the US dollar. If they want to hoard it, they want to use it as an exchange mechanism, they want to use it for savings, for investments, they will do that. They can't really stop it. If there's lots of good news about the US, people will buy the US dollar, but they won't necessarily be buying the US dollar yen. They're buying the US dollar. They're selling the pound. They're selling the euro. They're selling the Swiss to buy the US dollar. That drives the US dollar yen up because the yen is weak. So it's not something that the US dollar are going, here. I mean, I wouldn't be surprised if they were poking them. But at the end of the day, they don't have a choice. But that does not mean the yen is going to power up. It means that there's a lot of institutions caught offside on their yen positions. And if they can't get back on side, they have no choice but to dump the yen positions, which means flipping the other way and buying the yen, because they were obviously selling it. That's why their positions are profitable. So that causes that additional drop to start happening. Everybody then sees that and they start to buy the yen because that's the currency that's powering up. But there's lots of other fundamentals behind the scenes to do with Japan that need to also fall into place to make you want to keep holding that currency. One of them is fear. Yeah. So when there's a big fear on, you tend to put your money into safe currencies like the Swissy and the yen. You look at something like financial juice at the moment, where are we? Extreme fear. So there's a lot of things pointing to the fact that we should necessarily be doing the right thing and dumping, again, buying the yen and dumping everything against it. But it doesn't always happen that way. So, you know, it's a very difficult situation. And again, when you look at this year, I keep saying, you know, you go back and look at history. History is different now. What we used to use, what we used to do, how we used to measure is different. We didn't used to have ADRs at the levels we're at. We used to be twice as big as they are. All the markets are contracted. The indexes are going down in a bear market for over a year. We've never had it. Yeah. We've never had these situations that we're in. Last October, when the intervention happened, the world was a very different place. Interest rates were a third of what they are now. Yeah. So everything is different. You can't say for sure what will happen. But historically, it cannot go higher fundamentally for the Japanese. And don't forget, there's two sides of this. Us in the West, we want the stuff out of Japan. We need the stuff out of Japan. They got to export it to us. If we do not help out, they will just have to put their prices up. Will we stop buying from them? Probably not. We still need iPhones. Yeah, what are you going to do? Go, I'm not going to use iPhones or Android anymore because they all run on equipment made in Japan and China. So, you know, there's a lot going on under the hood. All we see is the front end. So we only get to see the front end, but the mechanism behind it, like I said this morning in this morning's session, you don't need to know the why, you need to know the what. Why things happen, some of it's important to understand. Some of it isn't. Some of it is like last time this happened quite a few times in the last when this has happened. This is what the aftermath is. Yeah. The why and the why it would continue or won't continue doesn't really come into it. Our expectation is X. So you just have to go with what it is, basically, and just hope. Half of trading is luck. Can other countries do that as well? No. Well, yes, of course they can. We've done it in the UK. Look at the pound, US dollar. We did it. Every country has a mechanism for disaster recovery. Yeah. So this is the pound, right? This is our beloved leader, Liz Truss, going, we're going to completely change everything in the UK. Hang on a minute. No, we're not. That was Bailey bailing out central government. Yeah, that is an intervention by the Bank of England. That is a catastrophic lunatic we put in charge of our country that decided to change the entire tax mechanism, meaning that we would immediately go bankrupt. This is Bailey going, Liz, you're an idiot. Sorry, guys. And sorting it out. So there's always a way for a bank or a central government to intervene. There's mechanisms in place. The Swiss did it with their pegs back in 2000 and whenever it was. There's always ways and means, but other countries don't get their economies into a mess like the Japanese do on a regular basis, because their entire world revolves around manufacturing stuff and chucking it out to the West. Unfortunately, the West only accepts payment in the West. So they have a bit of a unique bubble of economy where it just doesn't suit them to do what they're doing, but they don't have a choice. Whereas in the UK, we are service sector, banking related. So we can't really get into trouble unless you get an idiot in charge that says, actually, we're not going to tax in that way, we're going to do it this way. And then someone goes, that gives us a 25 billion deficit every month. Oh, does it? Not often it happens. But they do cock up. So, but you won't see it very often. But the nice thing about the Japanese is they tell us when they're going to do it, which is lovely. They give us a heads up. So you know it's coming. With something like the Hedging EA, expect lots of fools who don't know how to use it properly to message you saying it doesn't work and it's a scam. Well, I get that with everything I've ever done. There's a lot of fools. They're not fools. They're just uneducated. Not uneducated, or just can't be bothered. It's more can't be bothered. I was there. I've been there. Don't forget. I've been where everybody else has been in trading. Everybody goes through the same journey. Yeah, it's on my website. Up here, that PDF. That's the journey every trader goes through. Whether you like it or not, you will read that PDF and you will go, I am on step. And you're on one of those. You will identify with one of those. Everybody does. This is what everybody goes through. Everybody I've ever spoken to in trading has been through everything here. Everything I say, everybody's done. When I was talking this morning, we had loads of rant this morning about, have you ever been through this thing? Yeah, you buy it, and then as soon as you buy it, it goes down, it stops you out, and then you try it again, and it stops you out, and then you get into a trade, and it actually works, and you get out a break even because you've got to get back all that debt. Everybody's been through that. Yeah. But if you gave somebody a manual and said, read this 5-page manual, it's going to take you about half an hour, and it would explain to you why that will never happen again. They won't read it. They might skim it, but they won't read it. And it's the same with everything I ever do. Whenever I release a product, I sit in here every day and I use it for weeks, explain it. I write a manual. The manual is huge. It goes on and on and on, but it tells you everything you need to know about the strategy, the logic behind it, what every input does, everything. What people do is they go, buy, put it on the chart, didn't take a trade. Because you can't be asked to read, and I can't be asked to read, and it's totally normal. But obviously, if something doesn't work, it's a scam. Or it's something, I don't know, there's always a problem. But you never hear about the people that buy everything. I never hear from people, and they just go off and use it, and it works because they bothered to read it. Just life. You can't get away from it. Right, so just an update on the indices, because we've got no news this afternoon. We're waiting for tomorrow. Look at this DAX. Absolutely sideways stuck on the Dow. NASDAQ, we are looking like we might be bottoming down here. S&P is looking like it's buying up as well. But not really seeing a reason for the NASDAQ to turn here. We are in an accumulation. This is potentially, isn't it? Look. This could be a good spot to get out. But equally, we could just be pulling back on a down leg. So I'm going to leave it for the minute. I'm not too worried about locking that in for the moment. But yeah, we're not really going anywhere. We've gone down a little bit on the NASDAQ. That's the only thing that's dropped. Did see some earnings fly past earlier. Constellation Brands beats earnings. That's beer. Tilray revenue jumps, losses narrow, pivots away from cannabis. So yes, no NASDAQ stocks in there. So there's no earnings on NASDAQ today. What's the date today? 5th. Yeah. Constellation Brands, that's all we had pre-market today. So there's nothing exciting. I don't know why the NASDAQ's selling off so hard, but the rest of the indices are struggling. Not making new highs there, look. I get the feeling this is going to continue down. So I'm going to get out. I'm going to wait. One thing I've learned hedging with this particular strategy is the days you get out too soon are the ones that really, really hurt. You're better off just waiting and hoping you get that big move. And those ones you get out of really, really easy. The ones where you get out here and it goes like that to 125 ADR, they cost too much money. So the back testing I've done has shown, there's no point in trying to get out at 3R. You're probably going to hit a 5 if it's dropped that quick. But you don't know, do you? We'll see. These aren't the days that we make the money. The days we make the money is when we get those quick, clean breaks. We're not getting today. I love your explanation of the currency pairs. Nearly fell off the chair. Talking you, Jay. iPhones are made in India now. Are they really? I was just using that as an example. I don't know where they're made, but it's Japan make and export. Their whole industry revolves around manufacture and export, predominantly to the West. So whatever they manufacture and export is, Taiwan, which obviously is on its own, but part of China. They've got the largest semiconductor factory in the world. They make the semiconductors for pretty much everything around you. The vast majority of their export goes out to Japan for going into products like Matsushita Electronics and things, and like Mitsubishi and Panasonic and all these sorts of things. They've all got huge corporations behind them that are all, a lot of the time, backed by Japanese industry, and that's why the problems occur. But I think things are going to change. China does an awful lot more now. So I think, the dynamics of how the FX market works and why it works kind of changes from time to time. And I think with what's happening with BRICS especially, that's going to change because China's manufacturing is going to start going that way and the rest of it's going to start coming this way. And I think there'll be more going that way. I think we're going to be in a new world order in the next few years, financially anyway, which will obviously have an impact on the US dollar. But what it will be, we'll have to wait and see. Lots of speculation about it at the moment. Japanese are always polite. Yes, I know. I eat a lot of sushi. They're the only Japanese people I ever come across in the sushi restaurant. They're always very polite. Afternoon, Gordy. I don't care what anyone says. Lee helps us become better traders. I know, David. You're my best fan. I haven't got many. I've got 79 at the moment. That's not bad, is it? Yeah. We'll wait and see. So we have broken down below support. So we had a nice propulsion move to break that level. So let's see if this holds. If this holds for a step down, then I'll get a nice TP on this and hopefully get out with a profit on that one. I'm not holding up much hope today for the S&P and certainly not for the Dow. I mean, this thing, no one on the planet can make money out of that today. Be very surprised if anybody's managed to make any money on that at all. It's just not gone anywhere for an hour now. So we'll wait and see if we get a break, but there's no news catalysts. So I think today's kind of dead. I shall be monitoring those three. See if I can get a profit out of the NASDAQ. That's the best hope today, is a push down into propulsion. We've got two good buy areas. I mean, that's going to be a struggle to get to, I think. But certainly, I think we can get down to there today. And if we can get down to there, I can exit. But the other two, I think I'm going to be stuck on. So yesterday was a break-even day. Very much like today. So we'll see. But I'll post in Telegram what happens with these this afternoon at some point when they've finished. But I get the feeling it probably won't be till later on today. It ain't moving. FX-wise, there's nothing else to discuss. We've been through the RSIs. There's no ADRs. We went through the weeklies yesterday and Wednesday. We're waiting. We haven't gone anywhere today. If you look at all the currencies, we're totally sideways today at the moment. Market's holding for non-farm payroll. So tomorrow we will kick off. I'm really hoping we get a negative move off of the US news. That'd be absolutely fantastic. Best 5 trades for the year so far. What does that mean? My best 5 trades for the year so far? Oh, no idea. I don't have any. Ones that end up in profit. Most of them. I don't have any best trades. Colonel Pinecone, you've been in here long enough. I get in, I get out every day. I've not got any better than worse than anything else. The best trades are the ones that are singles. My best trades are things that have been there now. What have I just got out of? There you go. Aussie CAD. 2 best trades of the year so far. Well, got in there, got out the next day, pretty much the same time, held it for 24 hours. Huge profit. Got in there, went through drawdown for 24 hours. Next day, got out, nice profit. There you go. I don't know. They all work. Most of the time. Not all the time, as we know. I mean, what strategy? H1M5. Everything I do in here is H1M5. There's nothing in it. Pick one. It doesn't matter. This is a question I get asked a lot. What's the best strategy? There isn't a best strategy. Every strategy works in certain market conditions. And every strategy has a downfall and an Achilles heel to it. No strategy is better than any other strategy. No such thing. If you're trading H4, M5 or M15, you're going to get a lot less trades than if you trade H1, M5. If you trade H1, M5, you're going to get into more squeezes than if you trade on H4, M5 or H4, M15. If you get into ADR, you're going to get lots of quick scalps and build profit very fast, but you're going to get into squeezes much earlier than you will on the H1 strategy, which is better than the H4 strategy. If you use the hedging strategy, you're going to return somewhere between 10 to 25% profit per month, but you'll be living in around about 30% of drawdown every month. They all work. They're all different. There's no better than anything else. They're different. It's like a Mercedes, a Porsche, a BMW, a Citroen, a Volkswagen. They're all cars. They all go from A to B, A to Z, A to F, A to whatever. Absolutely fine. They all get there. Yeah. Which one's the best? I don't know. Do you like Mercedes, Porsche, Citroen? Same thing, isn't it? They do a job. All the strategies do a job. They get you in and out of the market. They make you money. But there is no better or worse. The best trades are the ones that you think are the best. Nothing to do with what I think is the best has got nothing to do with it, has it? What do you think is the best strategy? Which do you prefer? I can't answer that question. I'm not you. Can you explain how you view hedging in the US indices? How you view hedging the US indices? Don't they all move in the same direction? No. How you view it? So hedging basically, if you're hedging the US indices, look at them. Are they all the same? No, not by a long shot, are they? Yeah. So to get to ADR on the S&P 500 today, we've moved today hardly anything. So ADR is all the way down there, the S&P. You've got all that distance to go to get to its average daily range. The NASDAQ, look how much that has moved compared to how much that has moved. And it's only got to get to there to get to its average daily range. Yeah. Look at the Dow. Dow hasn't even broken outside of the 5-minute pre-market range yet. We haven't gone anywhere at all. That's collapsed. That's moved down a little bit. This is stable. How are they in any way, shape or form the same? They're not. So some days you will find they will all do the same thing. Other days you'll find this thing will fly up, that thing will fly down, and that thing will go into a range. You never know. It depends on what stock sectors are being purchased and what individual stocks are being manipulated, which ones have got earnings out, and what's going on in all the different marketplaces. There's a representation on the screen here of basically 650, 700 stocks, all independently moving. Yeah. So if I, as a bank, decide to go, right, I've just had an order in from XYZ pension fund. They want to invest in the tech sector. Okay, brilliant. What's the top performers in tech at the moment? Okay, well, let's buy those, split all their money equally between them. The NASDAQ will fly. The S&P won't bat an eyelid, and the Dow won't do anything either. If oil collapses, the Dow will drop because it's got oil sector in it. NASDAQ won't move a penny. It won't move a penny. Won't do anything. It's nothing to do with oil. Yeah. If all of a sudden some regulation comes out worldwide that all cars have got to be left-hand drive, the motors industry is going to have to shell out billions in converting all of their cars. What's going to happen to the DAX? It's going to collapse. Why? Because it's got Porsche, Mercedes, Volkswagen, Audi. Everybody is in there that manufactures cars. The DAX will collapse. These guys will just go, yeah, whatever. NASDAQ will come down because they supply all the electronics to the motor industry. So those two will probably drop at the same time, but they won't move. So when you're hedging, what you're doing is, with this particular strategy, is you're saying, okay, I'm going to take a range of either the pre-market or just about to hit TP on the NASDAQ. I'm going to take a range of the pre-market, or I'm going to take that 5-minute range. If we get a clean break, I'm going to go, thank you very much, and I'm going to walk away with a load of cash. Here, if we get no movement and a break that's really slow, I can go, I've made $2,000 there. This one's 700 in profit. I'll take it. If this one does this and locks in a $1,400 hedge, what have I just made? $2,700. What can I now do? Shut that, walk away, make money. Yeah. So the reason hedging works across the indices is because I made $500 there. Today's not a great example because we're hedged on all three. But you do get days like this, and you just either you will win or you will lose, depending on what happens. But if you get two break nicely and hit your target, and one hedges and another one hedges, the profit outweighs the hedges. Yeah. If you get all four break beautifully, you make an absolute fortune. If all four hedge, you lock in a guaranteed loss. Can't lose more than that. Can't lose more than that because I'm hedged. Yeah. So that's the reasoning behind it, is you are locking in a guaranteed amount of money that you can't lose more than that unless you decide to exit your hedge, which obviously is another matter, which I'm going to do a video on all of this anyway. But that's basically the theory behind it. Yeah. So what you will find is, today's a really bad example to be explaining it because we've got three hedges. But what you will find is, let's take this one as an example. So the NASDAQ, that was my order zoom in so we can see it. Look. Yeah. So that was my order, the green line. And that wick, you can see that wick, the higher that wick is there. You probably can't even see it. It's so infinitesimally small. If that had not have wicked out on that today, what would have happened is I would have been hedged in for an $1,800 loss there. But that would have been a clean break down to 2R, yeah, and a clean break down to 5R. So that would have locked in around about 5,000 plus in profit. If that little wick hadn't have happened, that would have been a 5K profit. That would have been a 2K hedge. We'd be sitting on 3K. Thank you very much. But that little wick stopped it today. Every day, you're going to get a different scenario. So that clean break, let's say, for example, this one didn't wick out the highs today and just clean braked as well and ran down to 2R, which it's just hit, goes sideways and runs down to 5R. That then turns into a 5K profit. Just done 10K on those two. Screw that, walk away, I'm going home. This all happens in 15 to 20 minutes some days. Other days, we sit here with 3 hedges on until 6 o'clock and go, for Christ's sake, will you move? You can't tell what's going to happen. But the advantage to hedging, and this is why I've put this EA together, is it stops over trading. So if you, as a trader, and this is the opening range breakout EA, which is the original EA I released for trading the open here. The problem with this, and this is a great example, is there's your, let's take the 15-minute pre, which is there. Actually, let's use the 5-minute pre-market as an example, just because the 5-minute pre-market is easy to explain. There's your 5-minute pre-market candle, this one here. So what happened was you went long, it came down, and it stopped you out of your long. If you're using stop losses instead of hedging, this is. So you then go short because your failure to the upside has happened. So therefore you go, right, well, they're not going up, they're probably going down. So you short it. And then it pushes up again and stops you out. And you go, screw it. Okay, well, I'll go long again. And then it comes down, it stops you out. And you go, screw it, I'll go short again. Then it stops you out. And then it's broken. And now it might absolutely collapse. But by this time, you've lost 6% of your account because you're over trading. You're continuously getting it wrong and trying to get it right, which is one of the biggest problems traders have, is trying to guess the direction of the market. You can't guess it. We don't know which way it's going. You can only use price action to give you clues. But the problem is the opening range breakout EA makes an absolute, it doesn't make a fortune, but it makes a nice amount of money over a long period of time. It's a proven edge, but it's not a proven edge every day. You get lots of days where it whipsaws and you can't make money with it. On those days, it can make big losses depending on how you set it up. If you want it in continuous mode, so it keeps trying to get the trade, get the break, and when you get the break, you actually make the money back. That's the idea. These days, it doesn't work. Hedging means you go long, you go short, and you go, why? I'll wait. You sit through this without a penny being lost, and then it goes, I'm going short, and you go, fantastic. Now you've made your mind up. We'll have a look at where you're going. And it just buys you that time to sit there like I am at the moment going, I will wait for you. Plenty of time. I've got all afternoon. When you've made your mind up, let me know. And then I will analyze the charts and I'll have a look at where we're potentially heading. I think we're probably going to get a bounce out of propulsion. So I'm taking the long off. Short off. Yeah, banked 5K. Now, all I need is a push up into there. I will close that out and walk away with a very small profit, but I won't walk away with a loss. That's the idea. The downside to this strategy is when you take that profit, if it then goes vroom, vroom, that's a big loss. However, there's a chance it will bounce down there. So you can add another position, DCA into it, and take it off when you get back up there for a break even. That's the whole point, is you're trying to get yourself out of the day with either a small loss or a break even or a small profit. Only on the days the market doesn't break. The market clean breaks 35% of the time. I've back tested this over years and I've exported all the data of every opening range break on the 5-minute and the pre-market ranges. And it sort of doesn't matter which you use, and what it doesn't actually matter too much what ranges you use either, which is what I found out. The 10 to 20% range which I use of ADR as my range breaks, which are the ones on there, it doesn't actually matter what size they are. The statistics are the same. Around about 35% of your trades will be clean breaks, just go straight to 2R and quite often get a runner, a la today. But I missed it because of that wick. Yeah, so if 35% of the time you get really nice clean breaks and the other 35% of the time you get hedged and don't do anything, you take a loss. The other 35% of the time, roughly, it's roughly a third, you get out of your shorts and manage to get out of the longs in profit. So around about 65% of the time, the EA exits with a profit on the day, not on each trade, on the day. So the day turns into a profit. So it's got an edge of 60-odd%. And as long as you're taking the big runs, which is why I said earlier, I don't want to take it off here because it's got a long way to go. Remember ADR, the average daily range of the instrument. If you get out there and you're wrong, that is drawdown. That hurts. Getting out 4 or 5R, which is close to ADR, means that there's a high probability that most of the time you're going to get that bounce back out, because when it gets to its average daily range, it runs out of steam and tends to pull back. Those are how we make our exits. That's why it works. And it's all to do with the overall portfolio that you trade. So if you just do it on one instrument, you will get a strike rate, you will get a positive return, a negative return. Every day will be different. If you trade 2 instruments, one in the morning in Frankfurt, the DAX or the FTSE, and then in the afternoon you trade one, the S&P, the NASDAQ, the Dow, whichever you want to trade. If you trade 2 instruments, one of them's a win because it's a clean break and one of them's a hedge, you will make more money because the clean breaks are always 2R, the hedges are always 1R. There's always a 2-to-1 risk reward ratio running. If you trade all 4, you have the added flexibility of a little bit of profit there. Let's say, for example, just for argument's case, that was a nice clean break 2R, 5R profit of 5K. I can just shut that and walk away with that and that. The daily profit is what you're after. I want to come out of today with a positive balance. Yeah, I've got 4 opportunities to do that. If all 4 work, happy days, take the week off. If 3 of the 4 work, happy days, take a couple of days off. If all 4 hedge, gutted, there's a 4% loss on the day. But all I need tomorrow is 2 breaks to get that money back. And then I've got 2 trades that I'm taking today. If one of them's a winner, one of them's a loser, we've got a positive day again. It's just about risk reward, but not using it on an individual currency or instrument, using it on a portfolio of instruments. And again, I know I'm fully prepared for everybody that is going to message me and go, I've tested this and it looks like it's doing all right, and then it doesn't. No, it won't. It might be that it shows a break even over a 6-month period that you test it through. It's going to have winning days, losing days, and stagnation. However, while this is stagnating, this one's rallying. While this is stagnating, this one's rallying. While this one's having a losing run, this one's rallying, and these 2 are stagnating. So these 2 don't make any money, don't make any loss. This one makes twice as much as that one does as it's coming down. The overall portfolio, P&L, is positive if you merge them all together. And you can also add into this the FTSE. You can add in what's the Japanese one, the Nikkei. There's other indices you can put in there, the France 40, for example. Indices are indices. They open at a set time of day. If there's an open, there's a volatility move. There's a volatility spike. Yeah, that's the whole purpose of the edge, is you know when the move is coming. You don't know which way it's going to go. So this is it's virtually the same strategy as the opening range breakout strategy, but the mechanism behind it is completely different on how it trades. Because it's trading, it's not interested in anything but yes, we are, or no, we're not, buy us some time. And for me, I'm not somebody that sits here and puts an EA on a chart and goes and walks away. I watch it. The EA is there to instantly execute everything for me so I can go, brilliant, I haven't got to do anything. I sit here and go, market's open. I'm in. I haven't got to analyze, watch, do it all. It does it all for me. However, I'm sitting here going, as I have today, don't like my target down there, wherever it was. I want it up here a bit. because I've identified something that my target is beyond something that may bounce at. So I will adjust my targets. Human intervention part of it is a big thing. You've got to be able to read price action to trade. You've got to know what the market's telling you. You're never right all the time, but you're right more than an EA is. Yeah. All this EA does is when you get a hedge, instead of going for a 2R target, it automatically adjusts your targets to 5R, close to ADR. So it's saying, okay, we couldn't get it today. Never mind. Let's see if the market decides to run. And if it does, fantastic. We should be able to get a bounce out of it because the market doesn't go like that. The market goes like that. This is our hedge exit to get us out of the hedge. You will get days like this and it will make a big loss. They tend to be news days. So you just got to be a little careful around news, which is why every morning and every afternoon, without fail, the first thing we do is we look at the calendar. What's coming up? When? When's the volatility hitting the market today? 1:30. Excellent. That's happened. It's 2:30. We don't have to worry about it. Tomorrow, it's hitting at 1:30. The market is likely to be absolutely shot to bits and exhausted by the time we even get to the open. Probably going to be pretty range bound tomorrow afternoon. Probably not a good day to trade. But that's your choice. You flick the switch on the EA to turn it on and off. All it does is automatically take trades on your chart for you. But that's basically the edge of hedging. And it's the same on any strategy. You can run this on FX as well. So it's something that I'm working on as well in the background. Is a position trading hedge EA. Because I've looked into hedging a lot in the past and I've never made it work because as a human being, it's too mechanical and there's too much to concentrate on. For me personally, I find it too difficult to track all the hedges. When you're in multiple positions, when you're sitting here managing a portfolio of multiple positions, you've got to take into account everything you've banked. You've got to take everything that's in profit into account. You've got to look at where you've got to concentrate your focus on what's going wrong. If you have all of this going on and half of it's hedged and half of it isn't hedged, it becomes an absolute mess. However, the mechanics of hedging are very similar to drawdown control in the fact that if something goes against you, the drawdown control slows the rate of drawdown, slows the rate of pain, and keeps everything under control. The hedge does the same thing by basically stopping immediately your P&L. So when you get to that, it never moves. It never goes beyond that because it's hedged. If you've got equal amounts of longs and equal amounts of shorts, you do not move any further. There is an argument for using an offset hedge so that when we go down, we use either a larger lot size for that to gain profit to control the drawdown, or we use a smaller lot size to slow the drawdown enough and then look at bounce points for getting out. So I'm working on an EA, which is a combination between the market reversal alerts EA and what I've learnt developing this strategy as something that could be possibly employed in Forex as well. However, every time I've tried it in the past, I've got one of those profit curves that goes like this. Yeah. That's what I have experienced when I've tried to develop any kind of hedging strategy in the past, which is why I've always dumped it. But I know an awful lot more about it now after the development I've been doing on this and what I've been looking into. So I'm looking into another way of potentially applying it to position trading. The hedging that I've always done before has never revolved around position trading and market exhaustion, which I now know is much more important. So if you can use your hedges around a either support resistance framework or a relative strength framework, I think there's a good chance of it playing out, or at least just locking you in. But the problem with it as well, and this is the thing that I probably makes me reticent about it, is when you look at things like this. I have taken losses, a lot of losses along the way on this move. Yeah. Can you imagine being locked into a hedge, a negative balance, right? And every single week that negative balance going like that. This is what happens with hedging. Because every hedge that gets added, which is all a hedge is a distance between a buy and a sell, is a hedge. So with that distance, whatever that drawdown costs you, every time you place a new hedge, that goes onto your P&L as a negative. On a move like that, what you would see is over a period of 2 to 3 months, your balance do that. Okay. Looks catastrophic, doesn't it? Yeah. But what you're not taking into account is all of the hedges that have worked and have been that. Or whatever it may be, plus 2,500. Yeah. So all of these totted up will probably get you down to somewhere around here and eliminate all of that hedge. So you're using all the same as we do at the moment with position trading. The whole purpose of position trading is you're using your profit to offset what isn't working. You use your profit that you bank from the correct hedges that play out within the positions against the hedges that don't work. A la pound US dollar. And it will work at some point. It will always work at some point. The market cannot indefinitely drop. It has to reverse. Fundamentals cannot do that. They do not do that. They never do that. They never have done it. And they never will do it because the fundamentals of economies don't allow it to go in one direction forever. But there is an edge to be had with the hedging system, I think. Although I need to figure out the mechanics of it as how it's best to perform the hedges. And offset hedges seem to be the best way. At the moment, the stock index hedge EA doesn't do offsets. It's a mechanism I've tested, i.e. if you go long with X, you go short with Y, and Y is bigger than X. However, in this scenario, doesn't work. It gets you into a massive, massive problem. And the days it doesn't work, your losses are exponentially larger. So I scrapped that mechanism. Someone's going to ask for it, I can guarantee it. But I have tested it and it doesn't work, which is what makes me a little bit reticent about the FX version of position trading strategy. But I'm working on it. It's another, but hedging works. It's a good strategy if you can do it. The problem is most people do it manually and it's very hard to keep track of it all. If you're only trading one instrument, it's not a problem. But it also slows down your payday. Yeah. So when you're in a hedge, it takes twice as long to exit as a normal trade. That's the other downside to it. So you will find that your P&L green is restricted a lot more because you'll find yourself stuck in hedges a lot more. And I think the other thing is psychologically, you'll find that number not changing very disheartening. You know, this is not, I like to see this go up and down. I want to see this get bigger so I can put it over there. I don't want to see it stuck. I think psychologically it's not a nice strategy, but each to their own. But it's it's something I'm playing with. When I've got this finished, obviously, that's my next project. I've never not got a project on the go. How did H1 hedging end up doing with that CAD Swiss? I don't know. Let's have a look. I can't access my VPS for some reason. Okay. I'll have a look. Wait for that to boot up. Decent short on the NAS today. Yeah. If you didn't get longed outro, which I did, what's making the NAS tank? Don't know. I can't see anything on stocks. So oil bottomed out. Could get reversal on the hourly. So oil, has bottomed out. We haven't had a reverse alert on it yet, though. So we just tried to push up into resistance and rejected. So we haven't had buyers are not back in control yet. Close. Waiting. Patience. Didn't think jobless claims did much these days. No, that wasn't the jobless claims. Of course, the NASDAQ's drop. You trade gold? No. Do you make more money on indices or FX pairs? That's a difficult question. Majority of my scalping has been out of prop. So the answer is no. But what I've made out of prop has been much higher risk than I would use on my own account. So as a percentage return, probably yes. More money scalping. Because what you're doing when you're scalping is you're in and out fast, aren't you? You're getting in and out very, 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 very quick. So if you've got a mortgage to pay, if you let's say your bills are 3K a month on prop, you can do that in an afternoon. Then you stop. And you only take that one trade that makes that opening range breakout risking 2% that you catch, and you get a 2R out of it, brings you a 4% return on a 100K account. That's $4,000. You've only done one trade. Stop. Wait for payday. Yeah. So what I've done on prop in the past is when I've got the funded accounts and I've got the money traded up to a level I want to withdraw, I've stopped. So it's very difficult to answer the question as to whether I would make more money FX scalping or whether I would make more money on FX on position trading, because I haven't had a solid run where I've done index trading constantly, because I've stopped because I've got to a point where I've withdrawn the cash. The other problem is I couldn't tell you how many accounts I've blown, which have been 8K losses. Yeah. I can't tell you how many runs I've missed, which would have been 15K profits, because I didn't take them because I was waiting for the next account to be passed through to me. See what I mean? There's no real way to answer that. We'll find out, because I'm not trading prop at the moment, and now I'm trading my own funds. We'll see. But so far, it's going well. As well at the moment as position trading. But then again, last month was a loss for position trading, but it was good for scalping. Can't answer the question. I don't really look at it like that. I don't think you should look at it like that. You look at it as a long-term thing. Can you pay the mortgage? Yes. Stop. If I have a big win, I will take that money and put it out, and I will reduce risk. Yeah. Because you've got mortgage to pay, bills and stuff. Okay, just read the 5 steps on your page. I'm at step 4. Unlucky. I only say that because you know what comes next if you've read it. What comes after step 4? Eek. Tune in to find out. Tune in to find out if Cadabra tumbles back to step 2. What am I looking for? Hedging. Right, CAD yen out, completely out, flat on CAD yen. So yeah, I mean, you can see here, CAD yen, it's not had a problem with CAD yen. Didn't really get into a problem with CAD yen. CAD Swiss, sorry, I'm looking at the wrong pair. CAD Swiss. It's like, yeah, I thought that got into more drawdown than that. It only took 4 positions. CAD Swiss, hang on. Yeah, it's flat on CAD Swiss. Swiss. There you go. So it got out of that 4 hours ago. So there you go. So that was initial entry. Got out, literally just got out today. CAD Swiss. There you go. Hence why we've got a P&L showing at 5.6% or something today. 5.35% P&L today. 23% DD currently. Yeah, it's out. It's done. Have you ever looked at building a EA off basic candlestick patterns? I have one. Price Action Toolkit. Does candlestick patterns, candlestick pattern recognition, and you can trade them all as well. So you can trade all the candlestick patterns automatically on autopilot. I've back tested it all. Absolute rubbish. It uses a stop loss. Oh, you mean on higher time frames? Well, you could test that with the Price Action Toolkit. If you want to, go and get the Price Action Toolkit, download the demo, test it on the daily time frame. I've never tested it on daily time frame, but test it on the daily time frame and use the whatever candlestick patterns you want to. How often daily engulfings reach? Yeah, try it. Basically, I have tested the when you've done so much testing, as I have over the years, and all my testing is automated as well. So it's not as if I'm visually testing it and there's any room for error in there. Everything is fully automated. As long as the data is good, the results are accurate. I've tested every candlestick pattern from literally single candlestick patterns like a bearish engulfing. That's not a bearish engulfing. Like a bearish engulfing. And I've tested different sizes of bullish and bearish engulfings. So the previous candle has to be a certain size. That has to be bigger than it. That has to be, the wicks have to be higher than it. The wicks have to be a higher high and a higher low. The wicks can be an outside bar. I've tested every variation of that. I've tested every variation of a shooting star. It has to be a certain distance away from a moving average. It can be wherever the hell it likes. It has to be at the top of a range based off of a fractal. I've tested 3-bar reversal patterns. I've tested 2 candlestick patterns, 3 candlestick patterns, 5 candlestick patterns. So you have to have a range of 5 candlesticks in an order doing a certain thing. I've tested everything. They all work sometimes. They all fail sometimes. And the only thing that makes them profitable is if you use a positive risk-reward ratio. The problem with a positive risk-reward ratio is it's dependent on where the candlestick pattern occurs on the chart within support and resistance zones as to whether or not it will ever reach that. So if you have a shooting star appear a long distance from a moving average after a 1, 2, 3, 4, 5, 6, 7 candlestick rally, there is a chance that you will get a 1-to-1 risk-reward ratio trade. Does that sound like that should have gone further? Yeah, 7 up days, and that's all they did. Other days, I can show you a pattern where you have multiple down days followed by a pullback, multiple down days. So this is a 3 down, 2 up, 3 down, 2 up, entry long. Risk reward, absolutely huge. That 3 down, 2 up pattern is one of Larry Williams' old strategies. Happens regularly. Fails as much as it happens. Problem being, and I've mentioned this before, I sounded like a stuck record, when it fails, you lose 1x, you lose 1x, you lose 1x. When you get the trade, the first thing on your mind is, excellent. Now I just need a 3R to get myself back to break even. So that by the time you get the trade that works, the first thing on your mind is, holy crap, down candle, get out. 2.7R. What am I down? 0.3R. And what have I done? Traded for a month and a quarter. Stop strategies with risk-reward ratios on paper, in theory, in back testing, work, but they are hideously painful to execute and hold on to. And to be honest, the edge isn't enough. There isn't anything that works in that. You're dead. If you're using a stop loss, you're dead. Doesn't matter whether you're a mean reversion trader or you're a trend trader or a breakout trader. If you're a mean reversion trader and you took that mean reversion, you got stopped out. If you took that mean reversion, it didn't quite get to your target down there, so you held on for it for 2 months. You couldn't hold it anymore because every time you held it, it pushed back at you. You got out of break even and then it hit your target. You didn't win. Yeah, you're a breakout trader. You took that breakout, and as soon as you took that breakout, it pushed up and it stopped you out. So you took the break the other way, it pushed down and it stopped you out. So you were like, hang on a minute, what's going on here? This must be entering a downtrend. So you get in on the first trend pullback and it pushes down, doesn't go anywhere and stops you out. This is 1, 2, 3, 4, 5, 6 months into your 3 strategies. You're dead. Doesn't work. Nothing works in any market condition. What does work is I'm going to go short. I'm going to see if it gets down to an area that looks good. And if it doesn't, I'll wait. And if it doesn't, I'll go, oh, screw it, I'll just get out. But what have you eliminated? Your loss. Why are you a profitable trader? Because you eliminated your loss. You're trading the same strategy. It's just you didn't put an order in the market to make you the loss. So you held on to it. So you thought, oh, that looks like it's coming down again. Well, I'll target that low. But you haven't got a risk-reward ratio to achieve, which puts your target there. So what do? You get out where it's getting to, not where your system or strategy requires your risk-reward to achieve. This is why they all fail. So yeah, I've tested them all. But like everything, they fail. This is look at oil. What an amazing 72 pullback bounce. He thought there. He thought there. He thought there. He thinks here. What's going to happen next? Not a clue. But I know damn well if I go long on the break of that high and I put the stop there, there's a high probability I won't make a profit. Or I'll have to sit there for 3 months before I get the move. 2.5 months in this case. But look at the risk reward, right? For a 2.5 month trade. Let's say you took the 72 bounce on that bearish engulfing. Your stop loss went to the high. You held this for 1.5, 2 months to get a 3-to-1 risk reward ratio on a daily time frame. 3R. That's a 3% gain on your account in 2 months. Is it worth it? And the reason I'm looking at a daily chart is because when you drop down below 4 hour on any candlestick pattern, they become completely useless. Virtually all the time. Because there's so much up and down movement, you can very rarely hold a position to not get stopped out on it. It all looks good on paper, doesn't it? It all looks absolutely fantastic on paper. Yeah, things like that work, double bottom bounces. But how often do you see that? Perfect tweezer bottoms. The Price Action Toolkit detects those tweezer bottoms. They've got this, I think it's 10 candles apart. If you get an exact bottom within a parameter, a tweezer bottom, it will go, there's a tweezer bottom, long it, because the sellers couldn't get through that level twice. So we know there's a lot more buyers there. Those sellers are not going to try again, so it popped. But that pattern, when you test it with the Price Action Toolkit, that pattern, maybe once or twice a month it appears. So rare. But you can't sit there and wait for them. There's a beauty there, look. Shooting star at the top of a range. Absolutely fantastic. So you'd have got in there, you'd have put your stop there. It gave you a 1-to-1. That's no use, is it? What's a 1R? Pointless. And then if you didn't take that 1R because you're going for a 2R, it came up and it stopped you out. Then it went down to your target at 2R. Too late. Stop loss trading. It's lovely, isn't it? I don't need to tell you that because I talk about it all day, every day in here, don't I? Same thing every day. At step 5, you don't join streams anymore. That is true, Kadabra. This is why all these people that come in here and come in the Telegram group and tell me how crap I am at trading and how it's ridiculous and useless what I do, they're in here. Why are they in here? If they were profitable traders, they wouldn't be in here, would they? Do I sit and watch everybody else's streams all the time? No. What am I doing? Trading. So if you get to step 5, I'll happily never see you again. Yeah. So as soon as you get to step 5, I hope I never see you again. Because if I don't see you again, you've cracked it. Job done. You should start a gaming channel so we can watch you play Star Trek. That's over there. Just need to minimize my chart. There you go. It sits behind my charts over there, basically. Let's see if GU will go through this propulsion. Yeah, so there's the retest. 4 hour. Yeah, so there's your reversal alert. Bit of a weird one, that, because it was a whipsaw spike, wasn't it? So we pushed, we've retested. We're off. If we can break that high today and get up to ADR, we're setting off into that propulsion gap. That's our retest area up there for an exit. Done. Out. Off you go, pound US dollar. But we're still not moving anywhere, are we? If you look at it, yeah, we had a rally yesterday. Day and a half. Still not gone anywhere. I bet you could use the Price Action Toolkit to enter on patterns with open TP and stop loss. Then have the market reversal EA to manage any DD and exit based on ADR. Yeah. Could do. Yeah, you could do. You could use both EAs in conjunction with each other. If you had a VPS running on one account, running the market reversal alerts EA, and you use the same magic number on this terminal, for example, with the Price Action Toolkit, take a trade and then let the EA manage it. I still join for the John Wicks banter. I don't know if any of you saw Brian's latest artwork. I don't know if Brian's still in here. But this is Brian's latest artwork. Last FOMC, which I think is very good. That is a good one, isn't it? John Wick hammered. And the best bit is John Wick has got, count them, 1, 2, 3, 4, 5 fingers and a thumb. Here, he's only got 1, 2, 3 fingers and a thumb. So before FOMC, he had 3 fingers and a thumb. After FOMC, he managed to grow an extra 3 fingers. Pretty cool, eh? I love the moustache as well. That didn't have one before, does after. Powell and John Wick in a pub. Wow, there's a conversation I'd like to have. That would be good. That's not true. You can be profitable and still enjoy being in a stream rather than being on your own in a room watching lines go up and down. That is true, Thought Feeder, yeah? That is true. Anybody that makes money trading typically is not staring at the charts. They're just sitting, waiting for the price, aren't they? So you do have a lot of time on your hands. What's that whiteboard behind you used for? Whiteboard? That's not a whiteboard. That is a piece of art. Can't see it. That's every motion picture character under the sun, basically. It's a piece of art, which all these are either superheroes or film characters and starships and dragons and stuff. It's a bit of art. I could do a whiteboard. I could be like Roger Banks. Is it Roger Banks that stands up and goes on his whiteboard and draws candlesticks and stuff? Teaches you what candlesticks are and how they go up and down? Probably learn that yourself if you just watch what's going on. I can't remember who it is. There's somebody who's got a course and all he does is stand next to a whiteboard and deliver a load of badly drawn candlesticks. And he draws a line and goes, when it comes down to here, it'll bounce. Really? Yeah. Paid $2,000 for that. Thanks, mate. Practice for his pens lines. No, it's not a whiteboard. Brian is still in here. One hell of a party, yeah. Do an office tour? I can't. This camera doesn't move enough. It does sort of move. I can't really do one. There you go. There's that. I've got lots of stuff there to do with stuff. Who knows who those characters at the top are? Someone does. And then we've got a load more John Wick. There's John Wick down there. And then I've got a load of other stuff over there. And there's all my monitors. There's me. There you go. Quick office tour. Very quick. Bit hard holding the camera around. My God, I'm really low now. Walking Dead, Uncharted. No, it's not Uncharted. What's The Walking Dead? The top ones, I said. Who are the top characters? Oh, this will test the gamers out, look. If we haven't got any gamers in here, look. Who's that? Top right, everybody who's watched Aliens knows who that is. Yes, Harold's got it. Best game ever made, The Last of Us, Joel and Ellie. Marathon session today. It is, isn't it? It's 4:30. I've got a spin class in an hour. Just don't flash your Lambo in the background. No. That would be quite hard because I haven't got one. I haven't even got a fake Lambo. I haven't got any cars actually on here. Are you on PC gaming or PlayStation? PC. Minecraft is the GOAT of computer games. No, it's not. I played Minecraft for years with my kids. Literally years. We built empires in Minecraft. I played a lot of Minecraft. Not through choice. He's not Lambo. He has a heli. No, I haven't. I'm not a Greg Secker either. I have a BMW iX3. I used to have multiple Porsches. I haven't got them anymore. All Porsche's gone now. And they were all old. Maximum I've ever spent on a Porsche is 35 grand. There you go. Not even a brand new one. Feel a gaming session coming? No. I'm doing gaming streaming. I would never get out of the office. Lara Croft? No. That's not Lara Croft. That's Vasquez from Aliens. It was. Clearly your kid has good taste in games then, yeah. Assassin's Creed? No. Haven't got Assassin's Creed anywhere. No, you didn't see the Assassin's Creed. I'll give you a final tour. So, can't steer up there. Scarlet Witch, Joel and Ellie, Vasquez, Lightsaber, Walking Dead, Stargate, Stormtrooper, Umbrella. Anybody know? Anybody know? Down there, you got Captain Kirk. Over there in the top left-hand corner, you can't see him, is Joker. Then we've got Darth Vader, FHD, which is from The Division, good computer game. John Wick, Starship Enterprise. And either side of my thing here, you've got Portal. So that's going into a portal, coming out of a portal on the other end. Pretty much every pop culture reference you can get if you're a gamer and a geek. Like me. And then that thing at the back there is about 300 characters from God knows what. Everything ever made. There you go. Resident Evil. There you go, Flav. You got it. Portal. Yeah. Stargate. Sekiro. Never heard of that one. The A, that's Stargate. What's your setup? Computer. One monitor. No, I've got 3 monitors. One monitor there, and this huge monitor here. There's a picture of it in Telegram. You can go and have a look at it if you want to see my setup. I did post it the other day. Not the other day, the other week. It's probably fairly close somewhere. No, that's somebody else's setup. I've got it somewhere. I know where it is, actually. It's on here. I've got it somewhere anyway. Can't find it. It's going to bug me now. I want to find it. I'm just thinking through Telegram. God, people post a lot of crap. Most of it mine, to be honest. Oh, there it is. Oh, that's my old setup. This used to be my setup. That used to be my old setup. This is this office, but old setup, 6 monitors. Absolutely pointless. Can't look at it all. Just gives you information overload. This is before I developed my dashboards, which eliminate all of this. Don't need any of this anymore. The only reason I had all of this was so that I could monitor the RSIs and monitor the ADRs. That's why I built the dashboards. Totally irrelevant. I have one chart in front of me now. That's all you need, one chart. That's it. But that's my old setup. I can't find my new setup. It's in this. But it's much more organized, a lot less tech. Do a house tour? God, what is this? Days in the life of traders? Not sure my wife would be happy. No. Yeah, house tour. Taking out the NASDAQ 4R. How often do the dashboards update? So basically, the RSI dashboard updates every time frame you're using. So this one is hourly. This one is 4 hourly. So basically, it updates on candle close every whatever time frame. So if you set this to 5-minute RSIs, it'll update every 5 minutes. The ADR dashboard is a constant on tick. So this only updates when it updates sort of constantly, but alerts you basically when you get to the level. So the ADR dash is kind of on all the time, and you'll get there and then it'll ping. So this is constant updating. Market reversal alerts EA the market reversal alerts dashboard, which I don't use anymore, to be honest. It's more for manual trading, and everything I do is automated with the EA now. But that alerts again the same on a time frame. So it alerts every 5 minutes, 15, hourly, 4 hourly, and daily, I think it was. I haven't used it for a while. I don't use it anymore. Don't need to, because the market reversal alerts EA dashboard, the whole reason for these dashboards was so that I could monitor these RSIs. When I got an RSI above a level I wanted to, I would then put that pair on a monitor to alert me when there was a reversal alert. So I'd wait for the reversal alerts dashboard to alert me and then go, yeah, I'm watching that, trade it. Now the EA does everything. Yeah. Well, I wish I had at least 3 for one. 3 for... At least 3, 1 for Dixie, 1 for current pair, and 1 for correlation. You don't need it. If you look at, you'll get analysis paralysis. If you have that much information in front of you, it's the same as if you stick too many indicators on your chart, you get analysis paralysis, because when you're looking at one thing for correlation, good point you picked there. If you have something that says there's correlation, and then you get a signal that tells you to go the opposite way to what the correlation is telling you, you won't take the trade. If you just traded the correlation on its own, you would. And even then, what are your odds of that trade you've just taken because of that system or strategy playing out? 50%. All you're doing is you're over-analyzing, getting paralysis by analysis, and then the odds are the same as when you've just taken one or the other. I used to think it was amazing you needed everything in front of you. That's basically what I was in Telegram. That's why I posted that picture. Because I was posting... Jeez. I was posting images from the net. So I posted this picture, right? This is what professional traders that sell you courses go, this is my setup. And you go, wow, he's a professional trader. Look at the tech. Look at all the information he can see. He only takes one trade at a time and on one instrument. What the hell does he need it all for? But they think that showing you all of this when they're trying to sell you something means that they're professional. When have you ever seen me use anything more than one thing? I got one pair of eyes. I only look at one thing at a time. You don't need 1,000 monitors. You need a monitor and a good alert system and a good strategy. You've got a strategy that gives you alerts. You don't need to. When that ADR alert dashboard goes off, we go, ADR's just been hit on this. And you go, bang. Yep, ADR's been hit. Analyze it. Yeah. If that ADR hasn't been hit and your strategy calls for you to get in when an ADR extension is there, if there aren't any ADR extensions there, you sit there and you play Star Trek. You watch a movie. You do something else because there's nothing else to do, is there? You're waiting for your signal of your strategy to set up. Dashboards mean you don't have to have any more than one monitor. I have one MT4. I've got two MT4s open. One trading one strategy, if I can find it. The other one trading the other strategy. That's it. Don't need any more than that. Dashboards. EAs. If you've got an EA running, you don't even need a computer. You stick it on a VPS and then you look in every day and see how much money you made. That's it. That's basically how it works. You don't need 1,000 charts. I used to have 1,000 charts. I don't anymore. I just don't need it. Really annoying me that I can't find my new office setup because I did a picture and a video of it when I first built it. And I think it was such a long time ago. I think it's just not in Telegram anymore. And I've no idea actually where it is. It's in probably I've got a folder on my computer called phone because I took it on my phone and it's going to be in the phone folder. But the problem with the phone folder is it's an absolute mess of stuff that I've got no idea about. Mainly full of cars, basically. There's my phone folder. Back end of cars, basically. Some people have the back end of women in their folders. I have back end of cars. Anyway, I'll leave it there today on that note. I'll be back tomorrow morning, same time, 7:50, and tomorrow afternoon, 2:20 for the New York session as usual. Looking like trying to hedge out of this. So P&L's down to $500. So I'm looking for looking for a little bit of a pullback up into there to get out of that. Be very close to getting out of that. It's only $250 now. There we go. Pretty much break even. Break even. Profit. There you go. So it's in profit. I can close that out. Is it going to rally or not? The trouble is with this at the moment, we're sitting in a propulsion gap at resistance, look. So I need that high to break so I can see that that resistance isn't going to hold. If that resistance isn't going to hold, we're going to push up into that double top, which gives me a nice out for about $3,000. Going to get there. Come on, let's get a push. I will go at some point today. Promise. So just trying to break that high. There we go. We've tapped through it. So see if we got enough buyers to get through this propulsion area. So this is that accumulation break. So this is that sell order that we're battering into at the moment. So they're adding into positions. The buyers are trying to get through the sellers that started this move who want the price down here. Buyers are trying to get back through them. Struggling. I'm out of the last. No, I'm not out of the last long, so I'm still in. If you want to get out of them, get out of them. If you're in, I'm going to give this candle the benefit of the doubt that the market structure is shifting back to the upside. So looking for push up into here. I just want to see them break this high, but they're not. They're not able to. Look, this is a double top to the pip. 2.5 minutes left on this candle. They're struggling to get through it. Hold. So your manual trades you keep at super low risk, but the EA makes trades for 3K. So your manual trades you keep at super low risk. No, your manual. I don't know what you mean. I don't do manual trades. Everything I do is automated. Everything. Because I don't get it wrong then, do I? That's where you go wrong. Trade manually, you get things wrong. Human beings go wrong. EAs that are programmed to do X at Y do X at Y. Unless you program them wrong, then they don't do X at Y. Like the trades I take myself. These are trades. Trades are taken by the EAs I build. I very rarely take a manual trade. I'm going to get out of this, Naz. Getting out of the Naz. Break even. That's $35 break even. I don't like the look of it. It's struggling here. So these two, I've still got a drop on potentially. So I'm locking in. I've got $500 locked in. I've got 3-4 grand sitting in floating loss at the moment. Doesn't look like it's going to make any moves today. So I'm probably just going to lock this in. If we do get down there, I'll get out. That might not have been the right move to make on the NASDAQ, but if you look at this price action, it's not really instilling a lot of faith in any directional bias at the moment. So not really convinced we are going to break back up. We could well just go flatline. The reason I'm thinking this is because of non-farm tomorrow. We've got non-farm tomorrow, so it's going to be a bit quiet. You don't take any trades yourself. Do you mean manually pressing buttons? No. I do every now and again. I will do, yeah, but there's no point. Why should I press a button when I've got something that presses buttons for me? This is why I build EAs. Yeah, EAs can work 24 hours a day and they can execute orders faster, more accurately, and manage everything much faster than I can. If I want to trade 28 FX pairs and something's moving very, very fast because of a news event, I can't manage that. EAs can do everything. EAs will get me in, out, bank it. This is why I use automation. I am still trading. Yeah, that trade you've just seen me close, I closed that. The EA didn't close that. I closed that. I'm trading. I made $6.50 loss because I'm trading it. If I hadn't have closed that position and it goes up to there, I would have made 2.5 grand today. That was my call, my decision, right or wrong. If it goes down to there, I'll be going, right decision. If it goes up to there, I'll be going, wrong decision. Doesn't matter. It's done. Move on to tomorrow. But the EA took all of these trades. Yeah, I decided to manually intervene because I was watching the price action and I didn't like what I saw. Yeah. Same with these. Yeah, every single one of these trades is taken by the EA. I, on the Euro US dollar, have an EA automated trade taken for me on Tuesday, and I'm in it. I set the TP there because I like the look of that propulsion gap. Yeah, if this sits here like this and I come back from my spin class to later tonight and I look at that and go, Christ, that's close to my TP, I will shut that. I won't take it, but I will shut it. Yeah, a system and a strategy needs to be executed when certain conditions are met. All a system or strategy is a set of things that line up to press a button. Why rely on doing that yourself when you can program something to do it for you? Because I sleep at night, it doesn't. I'm sitting here in the live room not watching what's going on. It is. It can alert me when certain conditions are happening. It can send me emails and say, you got $2.5 grand in P&L here. And I'll go, oh, thanks for that. Love that. But why not automate 90% of your job? It's like anything, yeah? If you go and work in any job, there will be a huge portion of crap you have to do. Every job has got a massive portion of crap in it. What's the portion of crap as a trader? Watching charts, analyzing, waiting for things to get to places so that you can do something. I've automated all of it. I sit in this stream and you don't see me do anything apart from watch this P&L go up and down and bank profit. This thing does it all for me. All of my products on the website are there because they automate me as a human being. The white box on the left, what EA does it come with? What do you mean, Ian? White box. This is a chart. What do you mean by white box? You mean this? This white box? This is the new stock index hedge EA, basically. So this trades the opening range breakout hedge strategy. Lots of people always say bots don't work or are risky or burn your account. That's why I'm so surprised you trust it. I built it, Kadabra. I trust it because it's me. This is me. These are my strategies I've developed and I automate. That's why I trust them, because I trade them. This is all produced by my EA, trading the strategy I've been trading for years manually, fully automated. That's all it is. Bots don't work because 99.9% of bots are scams. That's why they don't work, and they'll burn your account because they are price fixed back tests that basically are designed to show you the best outcome over a period of time. They're not built properly. That's why they don't work. Because I can build you an EA tomorrow that will make you $1 million. I will find a period of time and I will find a trend and I'll build you a trend breakout EA that holds it and takes 17 trades on there. I'll look at a chart. It's very easy. I can build you a bot now for the euro US dollar on the 4-hour chart. Yeah, and I'll show you a back test that goes from August until today. And what I'll do is I'll go and look at it and I'll go, right, every shooting star short, every 24.72 bounce short, every bearish engulfing but that is below a certain size short, every range break that is 1, 2, 3, 4, 5, 6, 17 candles short, every retest of the previous range short. And yeah, we'll close out the test there. I'll show you that. It's 100% strike rate. And I will program those exact things to happen into the EA, put a back test up and go, here you go, I turned a £10,000 account into a 1.4 million account in 3 months. Would you like to buy my EA? It's only $699. Do you know how many idiots there are out there that will buy that? Look at the MQL5 marketplace. Absolutely full of them. It's what the thing's built for. Selling people crap. Quantum Emperor, Quantum Wizard, Trend Master, Quantum Trade, all come with set files that you must test from this date to this date on this instrument using this broker and this spread. Look at the results, everybody. Bollocks. All of it. Bollocks. Total bollocks. Everything you see on here. Safe. Robot Pro. For $1,900. Are you fucking crazy? People buy this shit. I don't trade any of that. I come in here every day and have come in here every day for years and traded my strategies live in front of everybody, every single trade, good, bad, ugly, all executed with everything that I do. Yeah, because I built it. That's why I use it. I don't use anybody else's shit. Because it's shit. It's all shit. And the people that don't read the manual and buy my products think they're shit as well. Because they can't be asked to put the time in to learn how to do it. All you got to do. It's very easy. Learn. I like my setup. Thanks for everything. David, you've got to stop being so nice to me. I also have a couple of my own indicators. Yeah. Right. You can use the market reverse alerts, not the market reverse alerts, EA. The position trading methodology is a methodology. It's a way of entering and exiting the market. It works with anything. Yeah. Anything, any mean reversion indicator or EA out there will work. Yeah. With position trading. Go to the website. Go to the position trading bootcamp if you haven't already, Cadabra. And just watch that. Yeah. Yes, you can buy indicators and EAs if you want to automate this. You can do it all manually. You don't need to automate everything. All the products I have are cheap as chips. They're $49 and $99 because I have to support them, code them, and there's time involved. That's why I charge. I don't charge $1,920, $500,000. Look at all this crap. $2,000, $800. I don't charge anywhere near any of this crap. My stuff works. This stuff doesn't. Yeah, but you're not buying an EA. You are buying 15 years worth of experience compounded into 25 hours of education about how the things work. This is a 25-hour manual for the market reversal alerts EA, which is $99. Are there any new videos? No. Sorry, has it all changed in the last year? What's changed? I've been doing this for years. Nothing's changed. Nothing changes. Market goes up and down and moves sideways. Every time you press the buy and the sell button, there's a 50-50 chance of making money. Nothing's changed. Nothing's ever going to change. All the same stuff. Yeah, the EA does the same thing in the same way as it has done since I built it, and it's not changing. I'm never changing it. It does what it does exactly what I need it to do. When there's an extension of price, it gets me in when the sellers are on my side. When the price moves down, I exit the position. If the price moves up, I wait for the sellers to come back on my side and I enter again. That isn't going to change. There's absolutely no reason to release a new video because nothing's changed. This is why my YouTube channel hasn't got many people on it, because I don't release content. The last video I released was months and months and months ago. Why? Because I've got nothing to say. I've said it all. There's nothing new I can add. Everything on my YouTube channel is everything you need to know, in my opinion, in these playlists. Yeah, these strategies, there's everything you need to know about everything I do. There's 650 live rooms proving I do it every day live. 650 versions of me doing the same thing every day, producing profit. And there's a bootcamp which shows you exactly what I do. Nothing's changed. It never will, because that's all that I do. You just get in and get out the market. But I automate everything so I can sit here and talk crap at you lot all day because I don't have to do anything. All I do is wait for the EA to enter a position, and then I wait for this to go green and I put it over here. That's my job. It's boring as crap. I can't think of anything else to say. I keep thinking I must do another video, and then I look at everything and I go, on what? This is my YouTube channel. That's it. There's nothing else. I can't make anything else because I've said everything. Support, resistance. This covers everything I know about how the market moves. This covers all the information about aggressive drawdown control for when it goes wrong. And these are all instruction videos on basics of trading, candlestick patterns, how to set up an EA, what average daily range is, how to backtest. I can't think of anything else. There's nothing else to say. Honestly, there's nothing else I can add. I'd love to enter some more. I shouldn't have got out of that. Never mind. I'd love to build some more content, but I can't. I'm not going to build content for the sake of building content. It takes a bloody long time to do it. So is it the ORB EA? This is the ORB EA. This is the stock index hedge EA. This is my new one, but all it is it's the same as the ORB EA, except it doesn't use a stop loss. It uses a hedge exit strategy. So it's a 1 trade a day system. Opening range breakout EA, you will get in and out multiple times a day, depending on what the market conditions do. So the hedge EA is literally, it's a variation on the strategy, basically, that is a one in, one out thing. Yeah, you either make money or you don't make money on each instrument each day. That's it. There's no, some days will be this, some days will be that. You get a break or you don't. If you don't get a break, we hedge it and we wait. Different thing. You can replicate it with the opening range breakout EA. You can replicate a hedging strategy with this. I put a set file on Telegram for it, but it's not ideal. So I built a new modeling. Oh, I built a new, a completely new system basically around it. That's all. That's really annoying. Well, never mind. That was a 2K win gone there. Shouldn't have got out. I don't like it though. I'm not unhappy with my decision. I would have been happier with that decision, but I'm not unhappy with it. There's the propulsion fill. So that's our next target. Unfortunate. Never mind. One of those days. Start fixing websites. Yeah. Come to the lives every day and get more content analysis skills. Yeah. Exactly. Learn stuff. I'm better than watching Netflix. I wish I was as rich as Netflix. Since the open has been a bit choppy lately, lots of hedged positions, I'm testing the ORB strategy to go the opposite direction of the break. Stop loss hit on the NAS today. Yeah. You go the opposite way to the break. That will have worked very well, but then you'll get a run where we will get the break 5 days in a row, and every single piece of profit you will have made, David, will evaporate, because I will be making profit on every break and you will be losing on every break. Horses for courses. For every time it goes up, it goes down. For every time it goes down, it goes up. For every time it doesn't do one of those, it goes sideways. If we knew which of those it would be, we would just do it, wouldn't we? When it's choppy, like today, so you would have gone short today because you're not going the way of the break, but the short got stopped out. And if you'd have taken the short the second time, you still would have got stopped out. There's always a problem with everything. Nothing works and everything works. I hope you don't blow up Mega Famous. Not going to happen. I've been doing, I've just shown you on YouTube. Been on YouTube for 657 videos now, so that's however long. I'm not famous yet, so if someone was going to discover me and turn me into a famous person, probably would have happened by now. I don't want to be a famous person. More fun doing this. As you stated, all strategies have Achilles heel yet. Sorry, I'm just joining. Realistic, you're too late. I'm going home. Bye. Which pair are you analysing? I'm not. I've finished. What's the R again? Return. So on this EA, these R levels are reward. So that is your range. So that is 1R risk. That is 1R return, 2R return, 3R return, 4R, 5R. By the time you get to 5R, most days you will be very, very close to ADR, which is why it doesn't go beyond 5. There's no reason to go beyond 5R. If you're using 20% of the range, of the average daily range as your range maximum, 5R would be 1 ADR, which is why the 10 to 20% range means that you will very rarely get beyond a 5R. You will get beyond a 5R. That's not rare, but you'll get a bounce usually out of that sort of zone. Look at today. Today is an exact example of a 5R bounce, which I stupidly got out of because I was worried about the price action. And this is another thing, I'll leave you on this because I've got to go out. But what do I keep saying about watching charts and making decisions because you're watching things and getting scared out of the market? What just happened to me there? I wasn't concentrating. I was watching this thinking, I don't like the look of it. I'm going to get out. If I hadn't have got out and let the EA do its job, it would have got me out at $3 profit. Right. Anyway, I'll leave you there. I've got to go. I'll be back tomorrow morning, 7:50, and tomorrow afternoon at 2:20, same time. And anything you need, I'll be in Telegram. Otherwise, I'll be back tomorrow. We'll do the same thing as we do every day and see if we can make some money. Have a good evening, and I will catch you guys tomorrow for non-farm payroll.